Good afternoon, Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to today's recap. So I think this is pretty much day 3 of this choppy type action that's been hard to trust and somewhat hard to trade. There's been very select spots that you've had momentum, but most of the stocks that we've been trading, if you've been adding to any of your longs, they just don't work and they go against you. I had like 3 or 4 plays that I thought were really set up that I went for in the first hour of the day, and they all failed. Okay, Qualcomm was fine. It wound up closing on the highs of the day, but IBM wasn't ready to get through, Caterpillar not ready to get through, and Goldman Sachs wasn't ready to get through. So if you go after these momentum trades and cheat a little bit ahead of the momentum breakout, you're going to get a little beat up if it doesn't trade through, or if it doesn't go through and then hold for 30 to 60 minutes and show commitment and then give you the bigger move. So there's definitely an art to it, and lately it hasn't been there except for in some select spots. And as far as the indices, it's been hard to really maneuver because every time you get a pullback, you're like, is this the pullback? And it winds up not being that double down on that end. I think for me today I was a little bit better, whereas when we had the pull-in, I didn't add my diamond shorts, I didn't add to my VIX. I actually took profits in them, so it definitely helped my P&L for the day, whereas the past 2 days, I added to my hedges and then just didn't add to the longs, and again, was like a hamster rolling in place, which is fine. The rally started December 20th. We went about 30 sessions before getting 3 sessions of some type of choppy / frustrating tape. So if that's you and you're frustrated and you're losing money, just make sure you don't lose your discipline and give back too much money. Otherwise, you're going to be shooting yourself in the foot, or you'll be upset with yourself once things start to pan out and there's more clarity. If you look at the chart of the S&P, you'll see, this is that ascending channel that's still working to the upside. There's a lot of different things working in here. Okay, you guys remember this was that descending channel that broke to the upside, and we've been just really methodically following this the whole way up. We tested the floor right here, remember, and they couldn't close below it, and then we continued. And now, I would say you could even look at this a little differently. If you want to really micromanage this, okay, you now have like another ascending channel. So there are different areas of the rate or the angle of this thing. So right now, you're getting, let me make this a little bit bigger for you. I'm going to just focus on this ascending channel here. So, you had, remember, this is almost very similar where at the upper end of it, it was following it until it broke right here below it. Okay, so that you thought would be maybe a correction of some sort, some sort. If you remember, this was the day after Fed Day, and we pushed through, came back below. That was a day that some of us took off some positions, and you had a 3-day pullback. But this has been the biggest pullback of this year, these 3 days. So if you want to micromanage this, you could say we're now on top of this upper end of this uptrend, and if we were to break this or break or close below, just say today's low, then perhaps you get a micro move to here, or maybe even a move to test this more, the accelerated uptrend. So, we're talking about micro moves, macro moves, momentum moves, and you want to take a step back, like to see what this really looks like. That's how tight it is, because if you go to the more gradual uptrend, you're here. So what level do you trade? Are you a macro investor and you don't care about what's going on here because this has never been tested? Are you a momentum trader that doesn't really take much pain, and every time it looks like it's going to break this, you get a little worried, kind of like what happened here? Or are you an extreme scalper and you're trying to go against this trend if it were to break here? So I guess all 3 are worth noting, but you have to know what your time frame is, because if you break this and you're trying to hold for the year, big deal. Okay, if you break this and you break this, and then we get a test of what could be a more gradual uptrend and then still go higher, big deal. But as professional traders, which we are, we all hold on different time frames, so we all have different risk tolerance. So at this particular point, this trend is still intact until this little area breaks. And then you want to look a little bit more macro, obviously, and this is where we are as far as we're now right at this peak. So we took out this 1347, we're approaching 1357, and then you have this this high when we killed Osama bin Laden right around 1370. So it's still very methodical. But look at something a little different here. You see how we closed pretty much near the highs of the day, right? Pretty much. And I've been bleeding, you know, the VIX. The VIX has been one of my hedges. It's been something that I've been watching closely. And yesterday, for the first time, I actually saw the VIX not go lower when the market went higher. So it helped me yesterday because I added to it and it helped fund some of my longs. Today, if you look at where the VIX closed, you go, you know, take a look here and see. And you will see that even with, okay, the market closing near the highs, like up there, the VIX closed on the highs. So that's a little bit of a divergence there that we haven't seen in a while. What does that tell you? Not sure yet, but you notice it. I'm still long, and that makes me a little bit more skeptical because you have fear building a little bit, which is actually kind of good because it gets rid of some of the complacency. But you know, we closed on our high yesterday. Another strong day here. We now filled this gap. So it'll be interesting to see what these people, why they're buying it when you know you still have a spider, you know, that closed near the highs of the day. If we would have closed on the lows, that's what I would have expected with the VIX. So you know, it's definitely an interesting spot. So as far as like stocks, obviously, Apple, it's in blow-off top mode. For those of you who are still long, and congratulations, I sold mine like 2 days ago. And you know, since then I've tried some cute shorts, but I've been doing it with a plan and finally made a little bit towards the end of the day, but still hasn't shown you a true sign that it needs a rest. You know what, sometimes it's easier to enter a trade than to exit. You know, when you had this earnings gap from earnings, okay, you had at least calculated gauges, okay, and when it had these 2 days and then didn't get into this earnings gap, this is when I bought Apple, right on this screen day. This is when I add, when it cleared the 2-day pivot, and I held to this day, okay. So you know, for me, I thought I was a pretty good hold, almost a week and change, you know, making some good money. And then obviously the bigger part of the move, the accelerated part of the move, I wasn't there for. It is what it is. You know, if you held during it and you're a macro investor, sometimes it helps. But we're now really extended from the 10-day, from the 20-day, from the 50-day. It's almost at 90 degrees. So if you want to talk like 90 degrees, stocks are hard to maintain a 90-degree curve. So if this is boom and this is this, you're now at 90 degrees. 90 degrees is like defying gravity. So we'll see. You know, if you want to take a look at, you know, guys ask me, like, how would you trade it intraday for a short? The only way you could really do it is with a plan. You know, and because otherwise you can get your teeth knocked out. You know, so here, again, you know, just to try it, this was the first move off the open. Nice move up, flagged, gave you some continuation. Then you had a red bar that sort of negated that green bar. So some people probably on this, when it broke this area, you tried to short a little bit, okay, but then you had to do it versus this high. So if you did it versus that high, you know, you had to be covering right when it went through. Because you're wrong. You are wrong. You said, okay, high, lower high, get short here. You know what? All it did is retest this area, and you had to cover there. If you covered there, you know what? You saved yourself a nice amount of pain. You know, and then it kind of got a little sloppy again, but all it was really doing was consolidating another nice move. And then, you know, here was a little bit of a different story. You know, this is when everyone in the world started saying that Apple has to get to 500 and Apple really doesn't have to do anything. So this is when I think some people started to get shorted right around 494, you know, and said, okay, you know what, let it beat me. You know, you now have a new high, so you're shorting it, you know, 494 versus 496, so you're giving yourself 2 points after a stock that just went 40 or so. And, you know, it really, you know, went back, and then at the end of the day, you had a, this was the big down move. That's all it was. So anyway, you know, it just shows you that it's just not worth it yet. So with that said, you know, the daily pattern's still intact, and you know, sometimes again, calculated entry, another calculated entry. This even was once it broke above here, and then you know, every sell has been a bad sell. So don't beat yourself up. Just you know, figure out what you did and how you could do it better. As far as like other stocks, Google pushed into that little earnings gap, but nothing special. Now, I mean, it will push through here, but it tried to get above this area, but it's having a little bit of a tough time. Baidu finally got a little energy. I haven't been trading it, but Sperling and those guys were trading it, and it broke above this little pivot. So this 3-day pivot was a nice little pivot for Baidu. Closed strong. You now have a big downtrend right around here. So you'll have to see what happens there with Baidu. It still has earnings, so you have to be careful. Amazon remains somewhat out of play. It's still in this lower end of the range. I think overall Amazon looks pretty bearish compared to the rest of the market, below the moving averages. Here it took a little time before burning off that move down, and then it triggered lower. Here you had a 3-day move off of support, and now I guess you could trade it long versus this support, which is now about 181. But if it starts to break 181, you got to get out of the way. You look like the weekly chart of this, and or let's go monthly chart, and it's I would say it's not really in question, but let's see from here, you have this trend, and then really from here, you kind of, did you break this one? You did, and I would say like this is big, okay? If Amazon were to break below this 170, I think even if you're a macro investor, you don't want to give back money. If a break and close below 170, and you could see it move down to this 126. Some would even say on a weekly basis, this is somewhat of a head and shoulders pattern where you have this would be the left shoulder, this would be the head, this would be the right shoulder, which it's getting lower, and then if we were to break this area, I think it's in trouble. So we'll see. Obviously, it has to break it before it happens. Just it's not acting well, so we'll see what happens from there. So anyway, Qualcomm and IBM. Qualcomm, it's just slow. I'm not used to such a sluggish, slow trade. I'm just trying to hold it. It's right back to where it was at the earnings high. I'm hoping that it could trade above it. I'm still in there long. I've probably ruined my average cost a few times by adding it to highs and but sticking through the pull-in. But it's right past or getting close to this 61.95. It closed right around there. So I'm hoping to get an extension. I don't think we're going to get like an Apple type extension, but it's hanging out above this longer term resistance, which now is support up here. It's a good macro investment, and hopefully it gives us a little momentum. It hasn't really come yet. As far as IBM, I lost money there today. But overall, that didn't happen. Overall, it's still hanging in this range. It's still sloppy, but if it finally gets, I don't know if it needs to be upgraded. I don't know what it's going to take, but above 194, 195 with some volume, you'll get a nice move. But for now, it's just not IBM day yet. We'll see if that happens. We'll see maybe if the market confirms that it's going to head to 1370 or higher. That's when IBM will go. But for right now, people are a little hesitant. So is IBM. Caterpillar. Red bar wasn't ready. I was long, and you look at the size of this move. Obviously, different areas to be long here. This was earnings. We had a nice little sell into that strength, but it's going sideways. So I guess if you're going to cheat, which I did, trying to get long, and because I thought maybe it would go, and I wanted a little bit of a cushion, it didn't. You lost, and it closed red. So now you got to use this pivot area. If Caterpillar were to break 111, then that takes or negates this bull flag, and then the pattern changes. So if you're playing it for momentum break above 114, it breaks below 112, you get out of those shares. That means that trade has changed. If you are a macro investor and you've been holding it since here, or you've been holding it since here, and you think that ultimately you don't care because within a year, this level will get taken out and you're going to see 150, you don't care if it comes back down. So just know which investor you are, because right now this has been a big move. It's right in front of a huge spot. I guess some could say it could be a double top-ish, but I doubt it. But again, it's got to absorb it, go sideways before it goes. So know which trade you're in it for. Okay, if you're in it for this, it hasn't happened yet. Okay, and it hasn't triggered yet. It's just on the radar. If you're in it for something bigger, then that's what you're there for. As far as Goldman, tried to get through 117, 117.5, and we're all very excited, including me, and it didn't go through. Goldman Sachs, still though, if you look at it, as far as a pattern, it's still hanging tough. Yes, 3 faulty days, 3 days of choppiness, 3 days of frustration, but look where we came from. This was the time that you had your core position, and now if you're trading for a breakout above like 117.5 to take out this area and this area, you do it when it's confirmed. If it were to break now below this, just say 114.50, the trade changes because you're no longer in an upper flag. You then have a different pattern. You have to wait to see how it goes. But for right now, still hanging above here, just not ready to go. Some of the other banks all opened up and traded lower. JP Morgan said no to that resistance. Wells Fargo said, I'm not ready to break above the high of 31. Morgan Stanley said, same thing. All of these banks said, we're not ready yet. Maybe we need to read a little bit further into what that mortgage settlement means. Maybe we need to know how much we're liable for. Maybe the street just wasn't that confirmed. But overall, remember we were talking about it here, nice trade, and now we're seeing if you can get continuation. If you've been long Morgan Stanley, since when did we even start talking about Morgan? Maybe right around here on this wide range bar. If you're long from here, you probably at some point this year will be seeing 23 or higher, but how it gets there could drive you to drink. Thank goodness it's Thursday night, so maybe you can go out for some happy hour, because today definitely drove some traders to drink. As far as where there was momentum, some of the solar plays, which I wasn't near. That's been Sperling's baby. I think Mike Lee trades them, and FSLR, gave you a nice move. This broke above an area, right? We talk about areas, and this one actually broke above it. So that was a nice trade for those watching the price action there. It's been a pretty methodical move from the lows. It's now above the moving averages. There was some news after the close, so we'll see. Guys were talking about TSL. Look at that move. That was frisky. A lot of shorts there. When it broke above yesterday's high, that was a nice trade, and then I guess the shorts got squeezed when it traded above this pivot. Let's see, what did LDK do? Wow, even better. If you look at LDK, above all the moving averages, showing relative strength once it cleared this bull flag. This is the flag that I've been trying to get other things to trade above, but it didn't happen in the stocks that I was trading it. But here is a bull flag. Nice move, right? Nice move from 450, came up, rested, went sideways, and then it was a trigger buy above, what was it, 606, and went as high as almost 7. That's a nice trade. Didn't happen in some of the other ones, but happened in a lot of these solars. JKS, I heard guys humming about this one, rightly so. This one had a little different pattern. It's been like rounding, and then once it cleared this area, it's become a nice little buy, and then it extended today and even went through this prior pivot. So a lot of these things off the lows are still going. Some of the ones at the highs aren't ready for real breakouts. So we've seen that pattern this year. Netflix I really didn't look at. We had a 2-day short there. For me, I think it needs time. It's now it's kind of off my radar, but it looks as if it could work lower. Take a closer look here. It broke this little, let's see, nope, hold on. This was the tail that we talked about. This is when me and Taylor did the video. Here's your follow through. Now it's trying to hold. If this were to break below, this, you could easily see it move back down to below 120. So, keep that on the radar. But, Netflix, it's very tricky. So that's why, like I did the same thing last time. I took a 2-day trade. Here I took a 2-day trade. But if you're a swing trader, and you got short when he went back below this 130.50 and said, I'm putting my stop in at 133, beat me. That's how you get a swing trade that you could trail and you could, take for a nice long ride. It all depends on your time frame. As far as the OAHs, it looks like they're setting up again. This was the sector that I targeted in December. I gave the charts to Jim Cramer. He did a great off the chart segment, which I think we posted on our site if you want to take a look, talking about how to play it, how to tier in, tier out, to stay with it. And now it's really hovering right by this neckline. The question is, will this market have enough strength to continue? Here's the left shoulder, the head, the right shoulder. Right around here is where he did the segment. We said, buy a tier 1. First, actually, I think it was over here. I got stopped out at 108, and then we re-entered, and we wrote about it right around this 112. And this was your ad when it broke this downtrend. And now it's flagging right in front of this neckline. Okay, so the question is, can we get a nice juicy trade through that 131 to 132? I'm still long it. This has been a long trade for me. I've been in, tier 1 and 2 depending on the day, but I've been in at least a tier 1 all the way from about this area. So nice 15 points. So hopefully if you're holding it for a macro position in the chat room, it's been helping you. If you look here, I guess, if you want to draw, an uptrend to worry about, because everyone likes to worry about things, this is your floor. If you're playing it for a breakout above 132 and you don't have a commitment level to this, if you just say you're an active trader, you're not holding it from when we've been holding it, this is your out. If you're trading it as a swing type trade, you really got to give it to 125, because that could happen before it goes again. So if momentum stays tough and intact, trades above this, we get another move. If the market wants to correct a little bit and it breaks this accelerated uptrend and you're in it for a macro trade, you just hold. If you're not in it, you're not committed to it, you sell it when it breaks this 119-ish. Not 119. What is this? This is 127-ish. And then you see how it acts around 125 or maybe even around here. Why not? Why can't it pull in to the 50-day moving average? This is where it broke the downtrend. We've seen moves like this in the past, and so just know what your time frame is. And the TBT, TLT, first time I've really traded them, I looked at the patterns, and I went long the TBT. I was in the money. It was actually looking great, and then it pulled in at the end of the day. I'm going to stay with it. I don't know exactly how these things act. I'm not that used to them, but it seems as if it was trying to get above, this area. So I liked it for a breakout. I bought it around 1960, sold a little bit into strength, bought some back. But I'm thinking that economy gets better, things start rolling along, which it seems like they are. Why can't this thing get to 22? So we'll see. If that's the case, you flip it over, you go TLTs, which also put a little tail in. Just means that from I guess 121 or so down to here, I might need a little bit more time. But this was the area broke. And they really couldn't close it below on its lows, but doesn't mean that it can't continue. So we shall see. I'm going to stay with this for a little bit longer, and see if it develops here where it just wasn't a powerful trade, but it continues. We shall see. It's not my specialty, but it is what it is. Let's take a quick look at gold, GLD. This was remember Fed Day. Fed Day is when it. Let's see. Let me get a nice little trusty pencil here. This is when it broke this area. I think we drew it a little, like really the pivot that I was watching was right around here. Gave you a nice move all the way up. Remember ascending channels? Talked about this one. This is when it broke this ascending little channel to change the trade somewhat. That's when I think you had to take a little bit of a step back. And ever since then, it's been a little sloppy, right? It's, came in, bottomed, came back up, retested, and now it closed in the dead lows today. So I would say, this is your line in the sand on the GLD. If it starts to break below here, you might get a test of this 164 area, especially considering where we came from. And when we said cover your gold, when I was on Sullivan's show, Street Signs, didn't say buy it. I won't say I said buy it, but I said, cover it. It looks like it capitulated, opened up on the lows, closed green. Big move from here, 170 all the way down to below 150. If you look at the weekly, that also corresponded to a big level in the charts that we were talking about, right at this breakout. This was the breakout here. So I said, you know what, why not take some of that trade? And there you go. So at this point, you're looking at it this way, it does look like this could get back to retest this area before it decides which direction it can go. So again, know your time frame, know what you're looking at, know your risk. All rules you have to live and die by. So with all that said, it's Thursday. Since the rally started on December 20th, it's been a fruitful one. There's been a lot of rotation. There's been a lot of buy the dips, sell the rips, add on breakouts, look for momentum, rotate through sectors. And the last 3 days, it hasn't been as easy, but it's never always easy the whole way out. That's when you have to switch gears, not give back too much money, recognize if the market's changing. So when the new trend develops, if there's a new trend, you're not late. You're not in pain. You're getting your feet wet and you start going with it. And at this point, I won't say the trend is over, but I will say that it's getting a little frothy up here. And I showed you 3 different, ascending channels or uptrends to watch based on whatever time frame you're trading. And we'll figure out what the next step is. So hopefully you have a good night. It's Thursday. Go out for some drinks and happy hour. It's beautiful here in the Northeast. And then thank goodness no jobs number tomorrow. Let's hope for a quiet day. We make some money and we move on. Scott Redler, T3 Live, the recap. See you at the tomorrow's morning call is at 9 o'clock. It's the relaxed Friday morning call. Have a good night.